So I had some questions previously about how to use the context analysis dashboard for live trading. And while it can be used, the probability analysis does offer significant value and helps you calibrate expectations. One of the best ways is to use the chart feature. And when you get a opening condition right here, today we had an opening gap of greater than 50% of the average daily range, and the daily closes above the EMA. We obviously had a number of them already, and so I used this value greater than 5, just so that we have a larger data set to consider for possible day structures. And what you want to do then is go through and look at the variety of days. You know, what they look like, what the different characteristics are early in the day, and what it leads to later in the day. So early sideways trade, you know, wedge, breakout, and then failure to retest after testing the EMA. And then once you get this breakout below, this really defines the day structure versus this, which has no meaningful bear reversals, at least according to the way the AMA breakout paint bar is painting them, until the midday reversal, which transitions the market finally after the double top into a trading range. Similarly, here we have no meaningful bull breakout and follow-throughs after the gap up, and consequently sell-off that lasts for half the session before the reversal and transition to trading range. Here, trading range behavior all day. And the idea is that you would use the context dashboard to just get a sense of the variety of types of days, because one of the dangers of seeing a bull opening gap is that you expect that the day will remain bullish the whole day. And while generally that's true, it will exhibit more bullish characteristics, there are early things to consider that will help you calibrate expectations for the rest of the day. That will give you more precision in your analysis than simply saying, well, it's a bull gap, and therefore I'm going to be looking for bull price structures. You know, once you see consistent bear control, like this move from bars 4 to 10, yeah, this changes the probabilities of whether this is going to be a bull channel or simply just trading range. Similarly, on all of the other days, if you have no meaningful bear control and then bull reversals, then here we see stronger bull resumption, trend resumption. So this is how I would use the context dashboard to prepare for the day. At the open, say take the first 15 minutes after the open to dial in some opening conditions, and then look at charts to understand the variety of price structures that might develop during the day, so that you're not caught off guard by the high and low probability events that do occur. And then you could extend this into a larger research project by finding those low probability events like we saw here, and studying the other conditions surrounding this, similar to the way that I suggested in one of the previous streams, where we know this is the 4th of March 2019. Go and look at the previous 2 weeks and look at the price structures that developed on those days, and then the larger context that this is a part of. And then it may no longer seem like such a low probability event, because this is likely a vacuum test of something. So that's just a quick idea for how to use the context dashboard for live trading, and not literally for managing a trade, but calibrating day structure probabilities prior to starting your trading